Welcome to The Interest. I'm Katie Jensen. Bill Bodnar is back with his hot take on the economy with Master the Markets. And our own Vincent Valvo and Andrew Berman strap back on the gloves for another cage match. Will Andrew finally land a knockout punch? But first, Prime Mortgage in Denver, Colorado founded the Keystone Mortgage Academy to help educate and empower minorities. The inaugural class of loan originators graduated January 11th and are now well on their way to helping borrowers in underserved communities. Founder Janine Kemper sat down with our own staff writer, Erica Drizwicki, to discuss her vision for the school and the industry as a whole.
I just really fell in love with helping underserved communities and people that needed a little bit of extra help because I was those people.
Keystone's curriculum went beyond the usual 20-hour pre-licensing education to cover the history of homeownership in the U.S. and the disparities experienced by Black Americans in particular.
This is an opportunity for me as a founder to introduce something different, something that could work, that's promising on a lot of different levels, from providing career opportunities, providing economic development for minority communities, providing home ownership for minority families, and building generational wealth.
Industry veteran Ken Jones, who lives in Atlanta, signed on to serve as Academy instructor. Senior account executive at Arc Home and CEO of Biz Express Capital, Jones, was excited to help drive change in the industry and in minority communities.
I thought it was something that was groundbreaking. Obviously, being in the industry for as long as I have, I've seen all types of training programs and, looked at all types of loan officer onboarding. And this is by far the most unique.
Students learned about redlining, for example, and how homeownership in America has changed since the 1968 passage of the Fair Housing Act. The truth, it hasn't changed much. In the second quarter of 2022, the homeownership rate for white households was 75%, compared to 45% for Black households.
How do we break down that barrier? Part of it is, again, education and awareness. I think Keystone is teaching that.
Valedictorian Malcolm Quattlebaum is keeping the homeownership gap in mind as a newly licensed originator.
I know there's 11 MLOs that just graduated from Keystone Mortgage Academy who will take the time and will fight for you, and we'll make sure that your dreams can come true of being a homeowner. So we're coming. We're coming to help you guys.
Read more about the Keystone Mortgage Academy at nationalmortgageprofessional.com. For The Interest, I'm Katie Jensen.
We all dream of owning a home, but for too long, if you didn't fit the mold, you were stuck. Stuck because the system worked for everyone except you. We've changed that. Angel AI uses advanced AI technology to give a 100% trusted solution and fast answers for worry-free financing, allowing you to achieve fair and equal access to lending. Angel AI. AI you can bank on.
Hey everyone, thanks for tuning in to our Master the Market segment. So you may recall our last video, we talked about stagflation and those fears, even though that Fed Chair Powell kind of laughed it off that, there's no stag, no inflation. But on Friday, we got a consumer sentiment number and it was a dog. It showed that came in worse than expectations, which means confidence was not there. But more importantly, it also showed that the expectations for inflation went higher in both the 1-year and 5-year level. So not a good thing going into the weekend. So that leads us into this week. And it's all about inflation once again, CPI. You may recall back on April 10th, the last CPI reading, the bond market got pummeled. So you need to be careful with your pipeline, your conversations. And in this particular month, we're not expecting inflation to even decline, maybe by a 10th. And what we are seeing here at Mortgage Market Guide is what over the next couple of months, you're going to have some really low inflation readings that will be replaced by whatever inflation is at that going rate. And lately, inflation's been running at about 0.4 per month the last 3 months. If that continues, there is a reasonable chance that inflation hovers at or above 4% before we get to August. So we have a lot to track. I hope this finds you well. Watch key levels and have a great week. We'll talk to you soon. Bye for now.
Okay, Vince. So here we are, middle of 2024. Is this a good time as a mortgage company? If you're picture yourself, you're a mortgage banker, should you be doubling down on the mortgage business? Should you be scaling back and holding back until actually these rates start to go into a better direction? I mean, cost of money is expensive now. What are your feelings?
I don't know. I think it's really going to depend on every individual mortgage banker, obviously, because it depends on what their cash position is, what their overall strategy is.
Fixed expenses.
We've seen so many, right, that have given up the ghost. We've seen lots of mergers this last year and a half.
It's not mergers. Let's call them. They're acquisitions. Yeah.
All right.
It's very rare that you have a merger. And the merger is usually done to make actually the acquired feel a little bit better about their ego.
I agree with you there. I'm a little concerned. Well, I'm not a little concerned. I'm a lot concerned. I'm a lot concerned because clearly you've got a lot of companies that can't keep sustaining themselves. The marketplace is down so much. We're over 80% off from where we were just a couple of years ago.
Yeah.
You've got to, you can't keep all the operations going. It just doesn't work that way. So you're going to see some fall off of this, the acquisitions and mergers and stuff and whatever. I worry that you're losing players in general there. But then I also worry that we're gaining players in places that it's like we're flooding the market. We've seen so many people all of a sudden non-QM, everybody, and every single company that comes into non-QM says we are now the number one or the leader of non-QM and the leader in this, and we are great non-QM players. And I'm like, everybody can't be great players in non-QM.
It can only be one number one.
Well, it can only be one number one. Also, there's only so many, pizza shop owners out there to give a non-QM loan to. That just because now you're lending in non-QM doesn't mean the great marketplace of non-QM borrowers suddenly got so much bigger.
And then the margins get squeezed out. I mean, it's
Absolutely.
With all these non-QM players come in, that's the downside of this. But I'm kind of optimistic about this because, and listen, I don't want to see anyone lose their mortgage company. I mean, that's unfortunate. I've had friends of mine actually their careers have been altered. But I also know actually that this is a time for the mortgage broker, which I feel like our audience are mostly mortgage brokers. This is a great opportunity for them. And know something, I remember in 2008, 2009, 2010. No one was there actually defending the mortgage broker, but basically if you look at actually the mortgage bankers, they were ready, willing, and able to cut us out of the business. So I kind of look actually, and not that I feel that anyone, should be put out of the business, but I don't have as much of a soft spot in my heart for these lenders that are facing actually, the crushing margins, the just decreased overall volume and increased cost of actually just running a business. I mean, your tech stack, your tech stack has multiplied from what it was 10 years ago.
Well, I understand what you're saying there, and I do believe, that karma is something great. But one of the things I worry about is we talk about the rise in the broker market, and that's all fine and all. But one of the other things that's happening is because of the rise of the broker market, because the problems on the retail side, is you are seeing a number of companies that had retail arms that are now suddenly trying to be much bigger players on the wholesale side. And a lot of other smaller companies just going, all of a sudden, we're in wholesale, we're in wholesale, we're in wholesale. And if everybody's in wholesale because they're all chasing the broker market, that gives brokers a lot of choice. That's true. But there's nothing that says that there's enough business in the market to sustain all those companies now saying, hey, brokers, send us the business. And, if you're an established company, every one of these new people eats into your margin, eats into your market share. If you're new into the market, then every dollar that comes in is new to you because you didn't have it before anyway. So it's interesting to see how this is going to play out long term. And if I was a broker suddenly looking at some of these small guys and putting deals with them, maybe getting good, good terms on stuff, I'd still be a little concerned whether they're going to be there 2 years from now for me.
Yeah. Well,
I'd have that conversation, that's for sure.
Well, I think in the end, you'll have actually probably wholesale lenders that are going to optimize for current market conditions. And while some won't be able to survive, because we're not going to get interest rates going down anytime soon. When we look actually, it's not going to be 2024. I don't think so. So that relief is not going to happen anytime soon. So you need to be able to control your expenses. Mortgage brokers is the best way to control your expense. To be able to basically outsource the manufacturing of a loan to these independent mortgage companies.
Being a mortgage broker is a great thing to be. I agree with you there. But I don't think you're suddenly going to go from being a large mortgage banking company to suddenly converting to mortgage broker. We're going to lose those companies. These are different stories. These are different stories. It's like, where do you want to be? If you're coming into the market, you probably want to be in brokerage. But if you're already in the market and you're a mortgage banker, I think you've got some real challenges ahead. And simply flipping into other new products with everybody else flipping in, you really ought to be thinking very hard about whether that's the right strategy or not.
Yeah. Well, I don't like the brokers are better, but brokers are better in down times like this. That is actually that's undeniable.
I think brokers are better always, as long as they're actually brokering and not just representing one company and sending all their business to one company because it's easier. That's just called distributed retail. That's all that is. All right. Thank you very much, Andrew. And once again, I am brilliant, and you are a great sidekick to me as a brilliant guy.
Wait, what?
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.